Everybody, it's great to see all of you again this morning on a bright and sunny day here in the Hudson Valley. The last time we gathered as a group to discuss the housing market, it was in a different world. It was only 5 short weeks ago, maybe 40 days at best. And I'd like to thank you for joining Pattern again for this part 2 of a conversation about the housing market. Our world has continued to change, and the impact of this pandemic is felt across every aspect of each of our lives. Since our last webinar, the federal government has allocated trillions of dollars as an economic stimulus package. There's been billions of dollars distributed to small businesses, directly to residents, and funded a whole host of other programs in an effort to keep people and businesses afloat during this time. Today, we're reconvening our panel of experts in the field of real estate, lending, and housing. New York State has been particularly hit very hard by this pandemic. We're hopeful we have hit the apex and that we are on the downward side of this curve. The state is looking to lift some of the bans on business closures and slowly reopen the state and begin to recover. For right now, it is scheduled to begin on May 15, but that could very well change. Regardless, we do remain optimistic. So let's start out with a roll call and just say your name once again, please, and wave into your webcam as I say good morning. We're joined again here today by Matt Rand of Better Homes and Garden, Rand Realty, and a board member of Pattern. Joe Rand, also of Rand Realty. Welcome. Thank you for being here and participating. Hi, Bill Calderara, CEO and president of Ulster Bank and a board member of Pattern. Good to see you this morning, Bill.
Hi, Mayor Joe. Good morning.
William O'Keefe, real estate attorney from O'Keefe and McCann. Good morning.
Good morning.
Darren Scott, Upstate Director of Development from New York State Homes and Community Renewal. Good morning, Darren.
Good morning, Joe.
And also joining us today is Greg Langer, owner of Valuation Consulting, a real estate appraisal company located here in Newburgh, serving the entire Hudson Valley. Good morning, Greg.
Morning, Joe.
So the real estate and housing market has drastically changed since we last met, and it will continue to evolve. I'd like to basically ask each of you for an update. And we're going to start off with Joe Rand. Joe, you've been putting out amazing information in a series of web-based videos to help provide data on the housing market. This pandemic is happening during the spring market, which is traditionally a busy time in real estate. Sellers begin to list their homes for sale, and the inventory grows. Buyers typically begin shopping in full force. So I have 2 basic questions for you. How did March how did March go? And what's the status of April so far? We're coming towards the very end of the month. And what is your sense for how this market may be impacted for all of 2020? Joe?
Thanks, Joe. Basically, the market really started to change by about the 3rd week of March. From January, February through the first half of March, we had a really robust seller's market. When we did the quarterly market report for the first quarter, sales and prices were up pretty much in every market in the Hudson Valley. So the market came into March with a real head of steam, both in terms of the closings, which reflect a lot of activity in the fourth quarter, but also in terms of new contracts, new listings. It was a very robust period. Then, of course, there was the chilling effect of not just the essential services order, but just of the fact of the virus itself, making it unlikely. Even if they didn't have the essential services order, I don't think there'd be a ton of people out there looking to buy homes right now. So the market was really chilled. so far in April, what we've seen is we've seen a lot of closings. Attorneys and title companies have been very creative in getting transactions to the closing table that were put into contract January, February, March. So we're not doing bad on the closings. Opens, though, have been, and I will say this, opens have been much higher than I would have expected. I really think that they hit a wall, but there have been transactions that have been put into contract, either situations where people had seen the properties before the essential services order came into place, or in some cases, we've even seen people buying homes sight unseen. They haven't been inside the house. But there's still a lot of demand out there, even with the economic conditions as they were. So that's where we are right now. Where I think we're going to go is I think opens are going to be challenged. I think that closings we're going to close what we can in April and May. And then I think that we'll start to run through that pipeline that we had coming in from January, February, March. And then by June, if we don't have any new business going in, if we aren't able to go and show houses and be more active in the market, then I think June is going to be a lot slower in terms of closings. But I am hopeful that when they do reopen the market, I do feel as if that there will be still a lot of buyer demand that was left over at the end of March that got put into limbo.
Sure. Thanks for that update. Because when I speak with a couple of realtors on the ground and some other lenders, they're all indicating that not everybody has either had their income reduced. There's plenty of people that are still looking to buy, and they are still working, be it remotely or if there's a school teacher or a policeman or something. They're looking to buy a house. So I agree. I think that optimism is something that we need to hang on to as we move deeper into this recovery. So thank you, Joe, for your remarks. I'd like to turn to Matt. Matt, how are realtors dealing with the social distancing rules and other changes in the way that they actually conduct business? It's a very different model. So number one, how are they dealing with it? And number two, are people still willing to show their homes?
Well, we're restricted from showing, so agents can't go in with a client into someone's home, but they're finding ways to showcase the home, and we're still putting deals together, whether sight unseen or we're doing a lot of virtual showings. So where the realtor is going to the house and walking through with their phone on FaceTime and with the buyer and showing them through the house, or the seller is walking through the house on FaceTime and the buyer and the buyer's agent are looking through the house through the seller's phone. And then, sitting and having consultations. Agents are now having virtual appointments with their clients, going through all of the assets that they have, whether they're video or photography, recent sales, community assets, sending people to go drive through the neighborhood, drive past houses so that they can eliminate houses, and they're only going to go in to something that they're really serious about. So there's not this, I'm going to go look at 50 houses and then narrow them down. I'm going to look through all of these with my realtor, and then when I'm really ready, then people are arranging potentially to see the house. Oftentimes they're making an offer because, again, why go into the house and risk it if you're going to end up not buying it anyway because your pricing is all off. So make your offer, figure out, put the deal together first, and then do the inspection, because if something's going to show up in the inspection, let's see what it is, and then go into the house. And a lot of times the buyers then are just arranging to go see the house with the seller, arranging it directly or through their attorneys or through the realtor to gain access. So we have a lot of situations where there's a lot you can do virtually over Zoom calls like this, and using video and using FaceTime and using technology to look through the house. And there's a lot you can do before you actually have to go inside to push that deal along, so that the seller is confident that it's a real buyer who's coming in, and that the buyer isn't just running in and out of people's houses willy-nilly, that they know they're only going in when it really matters. And there's a lot of people that need to move, right? You have people who sold their house at the end of March, right before this all locked down, those people have to find some place to go if they're going to close on the house they just sold. There's a lot of first-time buyers who were losing in bidding wars before this, and so they see this as an opportunity to stay active and be able to get a house because they've missed out on a number of properties. So there are people for various reasons who have to sell, have to buy, or see this as an opportunity to get their chance when there's somewhat less demand or things are a little slower. And so it's keeping a certain sustenance level of the market moving. And then we're starting to look forward to some sense of, as the governor calls this phased reopening, but it's really a reimagining of how we do things, because we're going to need to do all of this virtual work in phase one, beyond. We're not going to just snap back into regular work. So agents are learning these skills and changing the way that we approach the business, because you still need to see as few properties as possible if you're a buyer, right? And as a seller, you want as few people in your house as possible. Right. And that's going to continue for months, even after we open.
Sure. Thank you. And what about things that need to be done in a home to either put it on the market or in response to a buyer saying, I like the house, but there's these 5 things that I really would like to see fixed. Are they able to get some of those things done at this time, or is it something that is going to happen actually after closing, after all of this this social distancing relaxes a little bit?
It depends on what it is. It's permits are a big challenge. So, someone with an oil tank that needs to get removed, I was dealing with last week that, that's a deal that is going to die if they can't get permits from the town. Right. to be able to remove the oil tank. So certain things will get sticky because the township's not open, because you can't do construction work of certain types. So there's some ways around it. If people really want to do it, they can close, and William can speak to what they can do to close, and without municipals or without with money in escrow for some of this work to be done when it can be done. But not every situation are people going to be comfortable, depending on how much needs to be done. Like an oil tank, for example, that's not necessarily something you want to roll the dice with.
Thank you. Let's shift over to the banking side of it. Bill, from the perspective of a lender and a banker, and your experience really as an economist as well, you've got an incredible understanding and real, a feeling for what's happening on the ground. And I just wanted to get, an update on lending in terms of pre-approvals, the underwriting process, maybe credit scores, the amount of loan volume that you're seeing, and the mortgage payments. How was March and April as far as payments coming into the bank, knowing that some people have either a reduced income or no income?
So from a volume standpoint, we're probably seeing similar to what Joe and Matt have talked about. We have record volume of mortgage volume right now. Now, part of that is refinance volume, but it's still running about 60-40, with 60% of that being refinance, but about 40% is still purchase volume. And that's both closings, but that's new applications coming in as well are still about 40% of our volume. So we've still seen a lot of people, finding a way, as I mentioned, to purchase homes, and that purchase volume is going strong. We think that there's been, and we're seeing, I think, a larger percent coming up from the city. So I think that's part of it. They want to get out of, they finally realize that, living in the city may not be all it's cracked up to be, and that's been some of the volume. But also, just local people that have finally realized that they've been looking for a while, rates are down, and they're finding that it's actually a good time to purchase for them, because they are still working. Now, having said that, there are a lot of people that are having financial difficulty, obviously, over the COVID-19 situation with so many businesses closed. And for that, we're seeing a number of loans. So it's probably a good 0.25% of our portfolio of residential mortgages have probably applied for some form of payment relief. In the last, and again, we service for ourselves, but we're also a large servicer for Fannie and Freddie, so that's probably across the board between both of those. And we actually made that process very simple for them, and we have a very simple application to fill out online. So we promoted it. We didn't hide that. There's some lenders that are not necessarily promoting the payment deferrals, but we are, because we figured that's one of the things as a community bank. We want to help our customers, and we want to help our community. So we've promoted that as well. But from the volume standpoint, so and I know William's going to talk about it as well. We found creative ways around closings. I mentioned earlier, we have the equivalent of a circus tent out in the back of our main building, and we do drive-through closings. So they literally drive under the tent. They never have to get out of the car. Our attorneys are there. If in protective gear, they come up to the car, hand them the documents they need to execute. And if we can, we do electronic signatures, but not all documents, and not all title companies are accepting those as well, or not all municipalities are ready to accept recorded documents that have been electronically signed. So we're working on that. The part of what's happening here, and I think it's going to be anybody's guess on the, as we said, it's the real time to reopen. We've written a large number of the SBA payment protection plan loans, the PPPs, and gotten those funded. They reopened this morning at about 10:30. So we have a staff of that's been sitting there trying to key those in and go through, and we've had probably sitting in the pipeline. We still had hundreds of applications to go, but we were very successful in the first round of at least getting through a lot of those. We funded over 30 million, and that accounted for almost 2,500 jobs.
Wow.
But, it's still, that's still going to be an issue of when and how will the businesses be able to reopen are going to be a big question.
Sure. In terms of the underwriting of loans, have you seen the need or the requirement for a higher credit score or more money down, things like that?
We really haven't restricted or changed our underwriting criteria. We've had strong under criteria for a long period of time, so we didn't feel it was the time to tighten up on that. The hardest issue right now to get some of the loans to closing are the verification of employment. Right. So with businesses working from home and different pieces, even if the person is employed, trying to sometimes get that extra verification that we need just prior to funding from a company or from an HR department. And our people are getting very creative with how they can get in touch with them and figure that out. But that's been the toughest part, just because of so many businesses aren't working, or have people working at home, and they're not always as available as they would have been in the past for those types of things. But we really have not seen, I know some lenders have tightened criteria, but we felt our criteria was already strong, so we didn't make any changes to our underwriting criteria.
Okay, thank you. So we've mentioned a couple of things in terms of closings. So I wanted to switch gears just a little bit over to William. And William, the last time we got together, you described this very, what I thought was creative drive-through closing. And I just wanted to get your thoughts on how that has been working. What are the challenges? And what do you see as far as any aspects of that changing as things start to open up? So William, give us an update.
Yeah, ours isn't quite as large as the Ulster circus tent, but yeah, it's working. I want to echo a little bit of what Joe said. When this started, when it was starting to feel a little grim, 6+ weeks ago, I had initially a pretty pessimistic view. I'm stunned over the volume of work that we've had over the past month plus. Not just the files that were in the pipeline, but the new deals that are coming together. In fact, we've been in this circumstance now for so long that I'm having deals that we executed, new contracts under the pause, that are now very near closing schedule. We might be closing it this week or next. So there's like an entire life cycle of the transaction that we're actually seeing during this pause. The accommodations, we're seeing of my colleagues in the area, a very wide variety. Everybody is doing something, I believe. But you're seeing some offices on one end of the spectrum where they're nowhere near a client. That they're staying at home and everything is done electronically. And I've also seen some where they're fairly close to blasé, and they're not really making terribly many accommodations. And I think really there needs to be a balance. As Bill had said, that there's, it's difficult in this industry to go completely electronic. There are certain stages that just require wet signatures. Usually it's the loan documents. There have been some accommodations by the state for remote notaries, but even still, practically speaking, we do need to be sort of present with the signatories to the loan. So we started with a canopy tent out at our koi pond garden here. We then actually developed we happen to be lucky to have a 3-bay garage at our office, and we converted one almost to a clean room, almost like a laboratory. We have these plastic baffles, and we keep the attorney on the distant side where we have the garden tools and the lawnmower, and the client is on sort of the outer side with the open garage bay. It's as good as we can manage, I think. It's not pleasant. It's we had an extraordinarily busy Friday. It would have been busy on normal circumstances, and dancing between car side closings and tucking into the garage, and it was cold and drizzly, and it's not fun. But I'm grateful to be able to whine about it because again, 5-6 weeks ago, I didn't think we'd be doing much closing work. So it's wonderful. It's hard though. If you've ever had the fortune to be at a real estate closing, it's a very dynamic event. A circus tent is probably appropriate even in normal closings. Lots of papers flying back and forth at the closing. Errors being corrected, last minute credits that are being changed, and missing notary or a date on a document. That's all in a normal closing where you have 10 people sitting at a closing table. Now, when we're doing it remotely by overnight mail and wires, and virtual notaries and all that, just imagine you have an error of $250. It could take half hour to get a hold of the person on the other side that you need the authority to make a last minute change. So we are closing less files than we would have been, and certainly than we were last year. But it's the energy that's got to be put into it is at least as much as last year.
Sure. Thank you. So with the fact that we just covered, the housing market from a sales and inventory perspective, we've covered it from a lending perspective, covered it from a closing perspective, a realtor's perspective. We've got a new panelist joining us this morning, Greg Langer. And Greg, you've been doing this for, my guess is over 30 years, decades.
Over 40.
Over 40. And so you've been through all sorts of markets, good, bad, indifferent, all sorts of different things going on in those 40 years. And I'd like to ask you, so how has the pandemic changed the way you do business as an appraiser? And the second question would be, where do you see the housing market going? And if you could touch on from a landlord's perspective, and touch on the commercial and the office market as well. So I'll turn it over to you, Greg.
Thanks, Joe. Well, you know, the Mid-Hudson area has really been pretty dynamic and had a strong economy for the last few years. You know, Matt and Joe talked about it. You know, things were happening. You look at what's going on in Orange County or in some of the cities, Middletown, Poughkeepsie, Kingston, Beacon. You know, there was a lot of positive energy. And for the first month of this pause, it seemed like things slowed down quite a bit. We were not very busy with new business, but all of a sudden here in this past 5 days, all of a sudden it looks like people are adjusting, and now we're doing more bank business, and some of it's for purchases, so people are still going through with purchasing their property. They're not backing out, and so we're now charged with inspecting properties to appraise them, which is the tricky part of our business, particularly when it comes to the housing market. Trying to appraise a 20-unit apartment building where everybody is now home because they have to stay in place has made it a little uncomfortable for a lot of people. So we've had to resort to, much like Matt and Joe, virtual, people taking movies, people taking pictures and showing us them. So as not to jeopardize, the health of our appraisers or the people in these apartments. Certainly if their apartments are empty, it's a lot easier to appraise them. So it's made it more difficult, and we now have to go to other sources for information as to what might be in a building, just to confirm what the owner tells us. So it's definitely a little trickier. Like a lot of people, our appraisers aren't in the office now, so you have to deal with them remotely, which is a challenge too, especially when you're trying to interact between lenders or attorneys and them being at home or in the field. So it's gotten a little more onerous. But we do see, there's some demand for our services still. So that's good. The apartment market is still pretty strong. When we do appraisals now, it's a little challenging as certain types of apartments, because of the governor's 90-day restriction on evictions, means that some people aren't paying their rent. So we have to account for that in the appraisal now. We now have to say, okay, well, what's the likelihood of all your tenants paying rent for the next 90, 100, 150 days? We're not sure how long this is going to last. So we now have to make some concession for that in terms of what we call vacancy and credit loss. Your credit loss is going to be higher at this time, logically, than it would have been, last year when because Patterns has done a lot of studies on this, vacancies at all-time lows. So there's not a lot of vacancy, but credit loss now becomes kind of an issue that we have to deal with. And the lenders are counting on us to take it into account as how this impacts market value. We don't see people getting desperate to sell. I think most of the buyers that I talk to or sellers are willing to wait this out. They look at it as kind of a short-term inconvenience. But certainly if you were desperate to sell for some reason, there would be more of a impact from this pandemic than there would have been a year ago. In terms of the office market, that's really kind of in turmoil now because of more people become accustomed to working from home. There might be less demand for office space. So we're not really seeing anybody looking for new office space in terms of the sellers that I've talked to. They're just trying to keep who they have because a lot of the people have had to shut down because they're not an essential business. So it's definitely trickier for the people who own office buildings. Yeah, there's still good demand for small office buildings, the small mom and pop accountants, small attorneys, places like that are still looking for space, but the big spaces are seem to be hurting.
Sure. As you see, the remote work catching on, so to speak, and I think it's quite a paradigm shift for a lot of employers, and they're realizing that it can work, and so in terms of office space, large office parks, I know they've been sort of dying on the vine, for a number of years now. But do you feel that there's going to be sort of an exodus out of New York City, Lower Westchester, out of some of these larger office parks or just office buildings, into some of these smaller ones upstate, where they don't necessarily need 10,000 square foot of a Google type space environment of an office, and they could get away with remote work and just having a few people work during the week in that office setting?
Yes, William mentioned it, that there seems to be, people coming up to this area, and as exciting as it sounds to be able to work at home, a lot of people with 3 young kids are not excited about working at home. So there is a demand for these shared service offices. We've seen more of those being proposed, and where you just have one office and you might share a copier, or a conference room or a lunch table or something like that. So that part of it could be changing, or it already is changing here in the Mid-Hudson, that we are seeing a move to that. And even although it got a lot of play in the beginning, the WeWork type of space that was established in other areas really didn't get established up here yet, but we're starting to see a little of that start in the Mid-Hudson area.
Sure. Thanks, Greg. Darren, from the perspective of affordable housing challenges, the last we spoke again 5 weeks ago, things were just starting to hit, and I'd like to get your response on how tenants are doing, how property owners are doing, how property management is doing in this crisis. So, Darren, give us a quick update.
Sure. Well, first, thanks again, Joe, for inviting us back. I think this is a really important update. And thank you for, Pattern's continued leadership in the Mid-Hudson. Just fantastic work you're doing. I'm happy to report that HCR continues to be open for business. Our line of business of affordable housing tends to go on whether the economy is up, down, or sideways. And so we continue to make funding awards. We're closing deals, and we're making sure that construction continues. We're very fortunate that the governor in his amended executive order has a carve out for affordable housing construction. So we've been holding industry-wide calls to calm everybody and make sure that they know that we're still open for business, but to also make sure that construction continues and under safe conditions. The only kind of construction that we have not permitted is occupant in place construction, which shouldn't happen for obvious reasons. So in my I was looking at my previous notes, and I liken this a little bit at the early onset to the 2008 recession. And while it's still early, I can say that in some ways we're doing a little bit better. The equity market has not plummeted. Interest rates have dropped a little bit to help offset some drop in the equity market. And we're expecting some, insurance costs to go up. Where it's gone worse, I think, is that we have a massive state budget deficit now. We went into this, $5-6 billion with a gap there. Now we're talking, between 10 and 20 billion. So that's a huge number. And I heard just this morning on the news, we all listen to the news, that we're not expected to recover for 3 years or so. So it's going to be a long climb out of this. And then, of course, the massive unemployment affects all of us, including the affordable housing industry. So, this May, we're going to be issuing our 9% low-income housing tax credit RFP. That's on schedule. Our housing finance agency branch of our agency, we are taking a pause on new deals just to see where we come out with the budget, and also as markets continue to settle. And we're continuing to monitor, the fallout from the massive unemployment. Our property owners have experienced a 30 to 40% drop in rent revenue. So we are doing whatever we can within our purview to lessen the burden, to defer second mortgage payments. We're considering the use of CDBG funding to help offset that loss of rent. So, that's where we are right now.
Sure. So yeah, the affordable housing, the term affordable housing, we've always said there's a crisis for it, and there's always been a need. And as the economy starts to recover, and even in an optimistic viewpoint, it's going to take a number of months, 3, 6, 9 months, maybe a year. And so as that occurs, I see that the crisis for affordable housing is getting worse. And are you seeing that happen as much upstate as you are seeing it downstate? Because your territory basically goes from Canada to New York City, so you see a huge geographic difference between those areas. Just wanted to get a little feedback on that.
Well, I think it's across the board. The more densely populated areas are experiencing massive layoffs, like upstate communities, which have fewer people, but people are getting laid off because of the closure of businesses. It's impacting everybody everywhere. And so, there's a glimmer of hope with, hopefully we are really on the downslope of this. And, again, kudos to the governor for how he's handled this. And now we're starting to talk about how to reopen the state. So I don't have any more information right now about that. I'm watching and listening as intently as everybody else. But I imagine that there are going to be parts of the state that open gradually before others, and that we're going to see, more people put back to work, and that rental income coming back into our affordable housing complexes.
Sure. Thanks. So my last round of questions, I kind of want to go around the room and everybody to look into their crystal ball and their magic hat. And what do you think that recovery looks like? Is it 3 months away? Is it a year away? Is it 3 years away? Just kind of think through your industry and all of these related industries. And I'd like to, just a little bit of feedback on that. How does recovery look to you? And William, let's start with you from a perspective of closing real estate deals.
From my perspective, I hope I'm not naive, but I expect that we're going to have a pretty busy summer. I don't have an expectation that we're going to end the summer with the volume that we would have had otherwise, but I do believe a lot of the volume and demand is being deferred and is going to be pushed. I'm anticipating, an unpleasant couple of months. We're going to have the typical push to close before school opens in September, assuming it opens in September. But I think it'll be again, seeing the demand we've experienced over the last month, 6 weeks, despite the pause, I'm anticipating that when the pause is eased in steps, I believe that we're going to be quite busy over the summer.
Okay, terrific. Joe, Rand, how do you see this over the next few months or so?
I think that closings are going to be about 60% of what they were last year for April, maybe 40% for May. And I think when things open up, I really do think that there will be some pent-up demand. I think that, if you were thinking about moving back in February, I don't know that 2 months being homebound will make you any more in love with living where you currently are as opposed to wanting to move on. And I think that if you had your house on the market back in February, I think the desire to get out of that house is going to be just strong. The question is whether the overall economic condition affects buyer demand. Certainly, if you lose your job, you're not buying a house. If you lost all of your life savings in the stock market, you're not buying a house. But we actually think that most of the job losses and furloughs were in areas that that most of the home buyers probably still, there's going to be exceptions, of course, but I think that by and large, the people that are ready to buy a home in February, they may be working from home, but they're probably still working, and they may have lost a lot of money in the stock market, but went from 30,000 to 19,000, now it's at 24. So I think that the buyer demand will come back. I think that what we've seen so far is that pricing is held up. The sellers are not selling at a discount to get into contract, even now in the midst of the epidemic.
Mm-hmm.
So I think that the most likely scenarios, if the economy stabilizes reasonably well, that the housing market will come back as soon as we're allowed to go back to work, and that it'll hold up. I don't think that we're going to have a great year. Even if you took out just the second quarter and looked at the first, third, and fourth, I think the first quarter is going to look great, and then third and fourth will be middling. But I don't think it's going to come to a halt. That everyone wants to compare it to something else. You can't really compare it to 2008 and the financial correction, the financial crisis, because the economic crisis there was indelibly tied to housing. Housing was the overvalued asset that when it blew up the whole economy with it. Here, housing is just completely outside of this whole thing. And I think that I think housing will have a decent chance of coming back if the economy is not completely discombobulated.
Sure. Thank you. Matt, from your perspective.
I agree with what William and Joe have said. Maybe I'm a little more optimistic than Joe, but I think I'm definitely more optimistic than Joe in general. But I think the second half of the year, there's a good chance that we'll make up for some of the lost ground and of the months here that are being directly impacted, assuming that things go the way that we all think that they're going to go. I think we're also going to need a certain amount of collective amnesia from the appraisers and the bankers, right? So we got one of each here. So that they're going to have to generally ignore the fact that someone was out of work right now, or what bills they didn't pay right now, if they're back on track and if they're back to work when we get into the summertime. And that I think will keep everybody moving along.
Sure. Thanks. And Bill, from a lending perspective.
I agree with William, Joe, and Mike on the real estate market. I think that will come back. I think it will be, and I think there will be, Matt, underwriting concessions for those types of things if it was very defined within those periods. There has been times that we've done that in the past for someone who had a medical condition or something. It was very defined, and we could identify what caused the issue, that it wasn't just an unwillingness to pay, that there was a causing item to come through that. So I think that will come through. Joe, I think part of it though is going to be the economy in general, and how will that come back, right? As I said, I think we will see a resurgence of housing up here, because I think there will be a wave of people coming up from out of the city, as there has been, but I think that's going to increase. And I think that's going to intensify. The local businesses, I think, have to really rethink their business plans. And we've been encouraging a lot of our clients and our customers to do that during this downtime. If you are closed, it's time to dust off that old business plan and rethink it, because the pattern of the consumer to come back into large areas, right? Large retail environments or different pieces may change. So they're gonna have to rethink those. I think restaurants have done a great job, or at least a lot of our local restaurants have done a great job of revamping themselves for this takeout business. I think they're gonna have to think about that and maybe keeping that in there. Some of the higher end restaurants are out with $50 meals or $60 meals for families of four, which they never would have had before. So I think they're gonna have to rethink how they do that and how they're able to go through. I think some of the employment will come back. I think a pretty good chunk of it. I think there's a lot that were laid off only because it was better off for the employee to be on an unemployment than for the employer to try to try to pay them. I think there was a little unknown, and I think we saw the biggest first wave of layoffs come when just before those leaves were, the mandatory leaves were announced, because I don't think everybody understood what they were going to mean and how some of the employers thought they were going to pay for those. But I think as soon as the businesses were able to reopen, some of that will come back. The stock market will have a little bit of play of this, particularly on the real estate side, if that starts to come back. So it really will be a rethinking of businesses rethinking how they do business today and what it will look like, going forward. And the ones that are going to be able to adapt the best, as that has always been the case, are going to be the ones that do the best.
Sure. Thank you. And Greg, from your standpoint as an appraiser, how do you see this recovery happening?
In terms of apartment rentals, I don't think you're going to see rents going up. I think people have to have a place to live, so you're going to have a lot of people moving around, but there's not going to be room for rent increases probably for the next year. You still have parts of the economy like restaurant workers and people in any kind of sporting related activity that who knows when they're going to get back to full employment. If these restaurants have to social distance, they can't hire as many employees. So I think that employment part of things will hold down rents. I think vacancy stays up. I worry about some of the commercial, shopping centers, things like that, whether all those tenants will come back. I'm not sure that's going to happen. So there's some concern there. But by and large, I think things will stay pretty level.
In affordable housing, there's probably, and correct me if I'm wrong, but there's likely to be more of an eviction problem. And I'm just curious what your perspective is on someone missing 2 months, 3 months, perhaps even 4 or 5 months on a rent payment. And how does someone get out of that hole, so to speak? If your income is low or moderate even, you're sort of building up this pool of owed rent. How does someone even approach that later on for a payment plan of sorts?
Right. So we're still we're all trying to figure out what magnitude this is and how long lasting. So I can't tell you right now how deep the hole is going to get, but it is a concern. And those sort of safety net provisions that we're able to, provide relief with, they only go so far. So I think, we'll be looking for, outside help for our tenants in the form of the CDBG payments. Perhaps that's only a thought at this moment, but there are also other landlords, public housing authorities I'm hearing are being very proactive in logging loss of income from their tenants and assisting them to get on unemployment as quickly as possible so that they have that coming in, some income at least. But I think it's going to be a long climb out of this, especially for lower income people who don't have, the cushion. They're not generally not folks that are in a position to purchase a home tomorrow, but they have been working, saving and putting away money and aspire to home ownership. I think that's going to be further out now because those resources are going to be used to, get them through today and next week and next month. I think this is going to be a long recovery, especially for the people at the lower end of the socioeconomic ladder.
Sure. Thank you. We've gone around the room. We've discussed a lot of things and great updates, and appreciate all of the information and certainly the analysis and your thoughts. I'd like to, ask all of you if, you'd like to get together in another 4 or 5 weeks and have this conversation again. I think we're getting a lot of really good feedback from the people that are watching these webinars. And I think that the information and analysis is very much appreciated as we look to a recovery. I'd like to thank the investors in Pattern Center for Housing Solutions and Rand Realty, the Carney Group, CPC, Rupco, Hudson River Housing, and Baxter Built Development, all fantastic partners that we've got in the center. We'll talk in another month. So thank you all and have a great day.